Go.
Hello, Warriors. Dale Pinkert here with TradeGATEHub.com. We are sponsored and powered by TradeView Markets. So let's quickly review what I talked about Monday. We're getting some strength in the euro. So I said the preferred short in the dollar was US dollar yen. And if you notice, the yen did fail from the 61.8 level. If you took the trade, book it. Again, my rules about red numbers, and the CPI is going to be a red number tomorrow. I also said sell the silver that was above 24. It was here on Monday. So there was a 60-cent decline, and we're retesting resistance here. Gold has recently made a new high, but check out the divergence on the 2-hour and on the 4-hour and on the daily. So there's a possibility that we extend up towards 1890 to 1900, especially if the CPI comes in benign, and believe that even gold is going to correct and that a top is imminent. One of the reasons I say this is a market I rarely cover, but I talk about that the white metals go first. And want to ask everyone, if you're here watching me in YouTube, what you see. And what I see is a 3 drive to a top formation. So I think that there's a topping potential for a high in platinum that could retrace all the way back down towards 1040, 1030. So I'll be monitoring this post CPI. So I don't plan on doing anything new until after the number. Now, we've had great numbers several times in a row. Platinum's trying to come off. And I believe that the surprise would be that it's a decent number, not a great number. So the market's looking for 0.3. And I'm even hearing some people talk about 0.1, which would really be a gonzo number on inflation. So perhaps the surprise would be that the CPI is not as tame as the market's looking for. Either way, I do believe that you can sell metals across the board. Maybe we get one more high in the gold. Here's a 15-minute chart. We're even diverging on this. So even if we made a new high in gold, I'm looking for shorts there. Silver today is an exception. It's stronger than gold, but I still believe that this breakout that we had in the gold silver ratio is valid. See, so we broke out, we tested it, we moved towards 80. We could pull back again, towards the 78 level, and this breakout's still good. My thesis is that the gold silver ratio is going to rally to 84 to 85, which means that we're still going to have underperformance in silver. Here's my target in silver should this scenario develop. It's down here at the 22.5 level is where I have a speed line off these two lows, could stretch maybe a little lower towards 22. So the metals will be a sale for me. I'm not getting long metals up here. And I also talked about if you wanted to be long the dollar, your preferred long was the yen. And I know a lot of people are talking about the potential of a right shoulder here in yen, and I could see it happening, but everything could change. Here was the pop I said I thought could happen in the 10-year, which did yesterday. We had this nice rally from 350. Still looks like it's carving out something that we can move back to 370. Under this 350 level, yeah, it opens the door for 3% 10 years. So we really are at a critical juncture here for rates too. If you look at the potential of higher rates, why couldn't we get a rally back to 4% without making new highs? That would be supportive of yen. If we do get a gonzo number and yields break down, I want you to be aware of what could happen in US dollar yen. And I've kind of showed this on a 4-hour that so far we have a 1. This low's a 2, but it did confirm. So it makes me suspect of this low. And if that's the case, I think we could trade under the 129 handle going forward. I also want to talk about the Widowmaker that has really killed a lot of people over the last, that's why there are widows. But I'm looking at nat gas in a bottoming formation. I want to see what it looks like around 350. A bear market rally, I think, is highly probable in that. So that's something to look for. And again, I think that should gold correct, that we could get a rally, we could get a break back down towards 1820, maybe 1800, which would set up a great buying opportunity in both the gold and the miners. And looking at things like TLT, which is higher today, it's still possible that we're topping up here in the TLT, just like the 10-year, and that we get one more shot down towards 98. That would be US dollar yen positive. But again, I think that the metals are over-owned and too much exuberance, especially in gold. I think the DSI is up around 80. So to me, this is not a market I want to be long after starting to get these divergence. Look at the difference between this high and this high, and now this high. So even though we're making successive new highs, and even if we pop tomorrow, we'll get another one. And even though gold made new highs, think about it. Silver is still 75 cents under the low. When's the last time you saw that kind of divergence? And again, I'll come back to the gold-silver ratio, which is a breakout, and that there's, I think, higher to go in the gold-silver ratio, which means underperformance in silver, although I think that all the metals could come down across the board. Currency is a little tricky, but let me just show you the euro pound is on the verge of breaking out again to new highs. I thought we'd go to 87. We stopped here at 87.5. And if you look at the daily, looks like this was just consolidation, and we're about to make a new move, a new leg higher that could take us to 90. And that's why euro looks so much better. Euro making new highs. But again, even the euro, just like gold, making new highs, you could see the glaring divergence on the daily. So we're not confirming on the daily. We're not confirming on the 4-hour, not confirming on the 2-hour. So even the euro is not confirming with the relative strength with it making new highs. But you look at the setup in the pound compared to the euro, and definitely more weakness here as expressed by the euro pound spread. So I'd be looking for places to short cable, stay with the girl that you took to the dance, and so far that's proved to be correct. You should have had 80 pips or so from Monday, and let's see how much oomph we could get on the upside, because the dollar being heavily weighted euro still doesn't look like the kind of bottom I would buy. Okay, to me it looks like a flag. These aren't the kind of lows that set the tone for a bottom in the market, and to me it looks like we can make new lows. Now at new lows we will have divergence, maybe at 240. A lot of people talk about a 102 level, and should probably wrap it with what's happening in the S&P. So on Monday, I talked about the 50% retracement, and it was a great scalp. But here we are on the verge of taking out the 50% retracement. So the next level of resistance is going to come in right around the 4,000 level. 61.8 is 39.96. And we'll see if we could get this breakout over this big trend line. So I know a lot of analysts and traders always say today is critical. Tomorrow really is critical. But I lean towards there are opportunities to short metals across the board, short the pound, and probably just stay neutral in the yen in case we do get this soft number and we get one more break down to just, maybe around 28.5. We get back over 135, I think you have to start looking at 140, which is my preferred. Check out the weekly. So let's call this a neckline in the yen on the head and shoulders. So I'll probably be buying weakness in the yen after the number, depends on the magnitude of if they sell it off, and think that there's a chance for us to rally back up near 140. Here's your left shoulder. So if we have symmetry, this high was 139.30. So perhaps we're going to head up here, if I'm right about yields on the 10-year, heading towards 4%. And we put in a right shoulder. And the next time through 130, you're looking at 114 in the yen longer term, which is where the big breakout actually began. I hope that I'm adding value and our whole team is adding value to what you're trying to accomplish as a trader. It's not easy, and you can't be lazy. You have to put in the work. That means screen time, that means research, that means intelligence gathering, and you have to do that so you're prepped. So have a plan for tomorrow after the CPI. Have your technical levels ready so that should the market approach them, you're not analyzing it, but you're executing. So I want to wish everyone good luck tomorrow. Mike will be with you in about an hour and 20 minutes, and you have to tune in tomorrow for Doug Casey. Those in my generation remember Doug's first book, Crisis Investing. I cut my teeth on that when I was a runner on the floor, and a lot of people are drawing parallels to what happened in the 70s to what's happening today. I think that's pretty well known. People have been beating that topic to death. What I'm going to ask Doug tomorrow is not what is similar to the 70s, but what is different than the 70s, which could include margin, could include leverage, could include the much bigger economy that we have and a different world that we're in. So history doesn't repeat, it rhymes. And I'm going to be digging for what isn't rhyming with the 70s from Doug Casey tomorrow. I invite everyone to join us. He doesn't do a lot of interviews, so it's going to be very interesting. I'm going to bring up the CBDCs. I'm even going to ask Doug about Bitcoin. I'll give you a hint. I've read some of his stuff. He's very constructive on silver. So we'll get some of his reasons and what he's looking for in silver. So in the meantime, remember, don't just count your pips, count your blessings, and stay tuned for one of the best stock pickers I've ever met in my career, Mike Venezia at TVM Trader.